Joining me now is Tyler Radke, co-head of U.S. Software Equity Research at Citi. Tyler, so the backlog on CoreWeave, the business that it has in the pipeline, was not as impressive as some had hoped, and yet they still have these pretty solid capital build plans. Why is that not a concern?
Yeah, so I think the important thing to remember on backlog is this is very lumpy, right? As you think about CoreWeave, they're dealing with the biggest AI companies on the planet. Microsoft is 70% of their revenue, and you have others, obviously OpenAI, a big customer. Google was a new customer this quarter, AWS as well. So you're dealing with some major players, and the timing of these deals can kind of make or break the quarter. And what we actually heard last night was that Microsoft-specific deal actually closed in the first part of Q3. So it didn't show up in that backlog number. So you'll see that next quarter. And look, we've seen this same dynamic play out at Oracle, which has done extremely well over the last year here. They had some quarters where RPO didn't increase sequentially, and then the next one, it was gangbusters. So I think the important thing to do is look at where is this going, right? You take a step back, they beat by greater dollars than they did last quarter. Revenue growth is expected to reaccelerate in Q4 as you get a lot of these Blackwell chips online. And they massively increased their contracted power this quarter, which I think is a good kind of leading indicator for future demand. So yeah. Overall, I think demand is strong, but again, expectations miss. I totally get why the stock is lower today.
Here's where I'm scratching my head. Last week, I was in Seattle talking with Matt Garman, the CEO of AWS, in part about the capacity constraints that they have in the cloud that led to the AWS growth being under 18% in the quarter. That concerns some people. And he was talking about how they're trying to grow intelligently, not overspend. And I wonder, is a company like CoreWeave sort of a temp worker or a Band-Aid as these hyperscalers build out their own capacity? Will CoreWeave grow with them, or are they just getting what those hyperscalers can't build right now and actually want to have in-house? Is CoreWeave going to lose out in the longer term?
Yeah, no, I think it's a very fair question, especially when Microsoft is a huge customer. So customer concentration, definitely a big risk. But I think the thing that I would kind of point to is, okay, how do we think about this AI market longer term? We know the public cloud market, potentially a $1 trillion market. AI could potentially be even larger than that. And so if you look at what CoreWeave does, I mean, they're one of the few companies on the planet that can actually successfully operate these large-scale GPU AI training clusters at scale, right? This is not something a startup can just easily get into. It's very capital intensive, takes a lot of resources, power, space, and these are not problems that are magically going to be solved in the years ahead. So I think it's something to watch. I think the important thing too, though, we heard last night, there is more diversification going on, whether that was some of these enterprise clients that you saw sign up, obviously a new hyperscaler coming on. So I think this is a big enough market. CoreWeave is going to win a healthy share of that. And relative to the size of the hyperscalers now, I mean, there's still a long way to go.
I also wonder, to what degree is CoreWeave in competition with the homegrown AI chips that each of these hyperscalers is trying to build, is placing in their own cloud? And then what's the impact of some of the chips that they're buying now at significant expense actually becoming, I won't say obsolete, but less cutting edge than they had been when purchased? Does CoreWeave need to reach a certain level of scale to be able to manage both that custom chip competition and the depreciation issues from the chips they're buying now?
Yeah, so I think on the custom chip, I mean, today they are exclusively partnered with NVIDIA, right? So they're effectively just running NVIDIA backed chips, GPU clusters for all the hyperscalers, for these AI companies. Now, it will be interesting to see how this plays out longer term. We did just see Google come in as the first customer last quarter. What does Google do, right? They make TPUs. They do run GPUs as well. But potentially down the road, this is something to be mindful of. But look, I mean, you were talking earlier about NVIDIA being a $5 trillion market cap, right? There's a lot of room to go, even in the NVIDIA ecosystem. And I think it's not just about the hyperscalers. It's about these AI natives. So there's OpenAI, you have Cursor. I mean, many of these other billion-dollar companies could potentially be big customers as well.